Hey, what's going on, guys? In this video, I want you to pay attention to similar to what I talked about in the last video. This is the first 30 minutes of trading, did about 5 grand, and then what I want you guys to notice is how I started out. Actually, the market started up and bullish, then reversed. Okay, and I want you to notice right in the beginning, I didn't keep adding into the play. As soon as the starts to go against me, and I see the 5 minute, the 1 minute, the 1 minute breaks down first, and the 5 minute starts to get bearish, and then I immediately start looking at the P&L as far as my risk, right? So I talked to you guys yesterday about, okay, you're paying attention to how many contracts you had in the direction of your play. If this starts to go against you, it's not adding to it, right? I'm focused on the hedge, and then you'll see, okay, I'll get down 500. Okay, is the hedge working? Not really. Okay, I'm down 1,000. Cut it, the risk, and then we work the short side. And then watch how I add and reduce. And then once I get some P&L on the book on the day, you can go to get a little bit more aggressive as we start to break down more. All right, so hope this video helps. Again, guys, if you want to sign up for coaching and mentorship for May, now's the time to do it. It's 50% discount. Anybody that wants to work on this, get better. If you want to start seeing gains like this, and this is this is the high level type of trading that exists as far as directional, cyclical, but then really learning how to add and reduce. I call it the art of the size. So when you get that down, you can see how I'm playing the micro cycles, 5 minute trend, 1 minute trend, tick trend, but there's a lot of little micro cycles in there to add and reduce, and this is how you compound your gains. So you can start with a little bit of risk, 500 bucks, 1,000 bucks for a particular play, and then parlay that where you add in the direction of your play. You can have, big comma days like this inside the first 30 minutes of trading. All right, so I'll get into the chart.
Okay, guys, so here, notice this is showing the bands and how we lay out the charts with the cycles, everything. This is pretty much my standard, what I use to view the charts. And then you can always execute in different brokers or platforms, but I try to view the charts in one spot. So what we came in and looked at this morning, NASDAQ, this is looking back on today's trading. And I want you to notice a few things. So the cycle comes in high for the 30-minute, all right? Notice this is the London Open, bottom of the cycle. Okay, this is yesterday's lows. So you have kind of two cycles. You have the move off here into Asia. You pull back low within the cycle. Here's the top of the cycle, right? Pull back, boom. This is a rhythm of time. Okay, and then through London, you rally to a new high. This is a new all-time high. When you come in after this big of a move from here to here, there's a lot of vulnerability. There's a lot of room. There's a lot of hot air below the market to get back to what we call the bottom of the risk range, and this would be on the near term. So near-term risk range, you're pretty high up here. It doesn't mean you can't continue off the open, but the risk is that you do start to break this trend down, you can get a nice move down on the day, and that's what actually ended up playing out. So notice that, and then here's S&P, and I'll show you in a second on the execution. I recorded it intraday. I'll kind of walk through some of the add and reducing, but this is the 5-minute trend, and here's the open, we start bullish, okay, and I actually went long and then added on NASDAQ here, right in here, long, and then I had to flip and go short. I'll show you where I did that. So here's the 5-minute. Well, actually, I'll bring up the 1-minute first. So look at pi. It's defining the uptrend all morning, right? And then it breaks down here. We call that the southern hemisphere. That is where the opportunity is day trade to be short. Okay, this is the short move from there. Very clear, very specific, very textbook for our model. Okay. But again, notice it opens up. So I went with the long first. I added in here, and then I bought back, and I was long S&P, then went short because I was long NASDAQ, so I wanted to hedge that a little bit. And then I started to quietly add to the short inside of here because we still hadn't broken down, but from here. But as soon as we broke that, again, notice the amount of points. Let me try to zoom in. Notice the amount of points. Okay, when we break pi, you're at 1433. You drop all the way, call it 11, 12. So 15 points, okay? When you're day trade on NASDAQ 15 points, you're out of the money a decent amount. So this is exactly what I said about yesterday. If you're long in here and you break, you got to start playing defense. What does that mean? That means, are you short? Which I was a piece, so that helped. But defense doesn't mean I start fighting it long, or I'm adding. No. What I'm actually anticipating is a bounce, and then this is halfway of the wall, the breakdown of the wall, or wall concept. Once this bar takes place, look at this. This is the bears put up this nice bearish wall right at 50% right here. That's where the market struggled, and that's where you should have some issues right there. That is where the market failed. So if I'm long, I'm not really anticipating a move all the way back to the high. I know it's going to probably struggle right in here, and that's happened to be where I was long from. So once it breaks down, is my hedge working? Playing defense, I'm paying attention. Am I down 500? Am I down 1,000? Okay. We get a little bit of a bounce. Maybe you sell S&P again to get a little bit more hedged on the short side. And then as we started to come down here, I just cut my risk and said, you know what? This 1 minute's rolling over. We're below what was working. Let's start to work the short side. So this is what you'll start to see right in here. I guess it's around 40.30. I started making some sales on the NASDAQ and I flipped my position. All right. So this is where we are in time. My mark on this or what? 1 second. Oh, there we go. Okay. That's weird. So here's long. Oh, so NASDAQ you can't see, but this is that 30 area. So I started getting short. Start to see me work the short side. But I had realized 35 bucks. I was up like 300, 400, 500 bucks on the open on the NASDAQ. And then when we broke down, this is after I had a couple profitable scalps. So I was down, I was up, and then I was down on NASDAQ. And then I short S&P, and this is me covering, shorting a couple more into the wall. See, about halfway from the wall down, right halfway. Boom, short. And then I started shorting NASDAQ also. So here I go from basically gave back my gains being long NASDAQ, made a little bit on the short side. And then from here, I'm watching this 4202 level and the level on the NASDAQ was like these lows around 4010. So you can see again, this is the edge to be selling and then covering down here. And then when we break to new lows, this is a lower high, I'm shorting that. And then this is where I start to get more aggressive, adding and reducing. And then I end up covering, I think, most of it down here. And then maybe I'm out on a new low. I think it may be in the 20s. So I'm basically short for this entire drop. Okay, and then you can see 42, watch 4202, which is right here. When that breaks, TMS, this is a 5-minute chart, is clearly bearish, right? So my traders know what that means. All right, let's see how it plays out. Hopefully this works. Trying to give you guys a better real-time execution and post recap. Okay, so here's my ebb and flow, right? Short a couple. So this is the tick chart. Here's a new low, and now look how, see this distance we bounced back? I started shorting here at the top of this cycle. We went a little bit higher, but I'm waiting, right? So short 2, NASDAQ, covered S&P on the low. So you can see I'm up more on S&P now because I had to stop and reverse on the NASDAQ. Even though I had a couple good scalps, I was down on the NASDAQ. Or sorry, S&P. Okay. So I did sell another one. This is kind of pie on the tick chart. So sold another one there. And then now I sell into the bands. I like using the bands when I'm executing. And then I cover near the lows of that tick move. Okay. And look at the cycles low. So I'm watching the cycles on the tick chart even. This is what I mean, the microcycles. And then the RSI is helpful. But overall, I want to be in the direction of the lower highs and lower lows. And a lot of times I'll trade the S&P chart based off the ebb and flow of the tick chart on the NASDAQ because they move pretty similar. Okay, so covering at the bottom again, right? Good covers. And then if we get a bounce back, I'll probably reshort up in this area. Let's see if I end up doing that. Okay, here was that wall on S&P, 50% retrace. Pie lines right in here. There's still room to come up on, this is the 1 minute. So I like to keep the 1 minute up on this side, and then I use the tick chart for NASDAQ. All right, see how I sold again and then covered? And a lot of times 4 or 5 points is about the width of, this 2 standard deviations on this Bollinger. So 5 points is a lot of times what I'm scalping for, in addition to kind of keeping a core near-term short. Okay, there's a look at my 1 minute. I was checking the 1 minute cycle. Again, this is still that 10, 11, 12 areas is really where the painful break is going to come from. 10, 11, 12 area. Okay, sold again up at 24. Notice I'll probably bid. Yeah, I bid down there. That's green. That's me bidding at 18 and a quarter, which is just the low end down here. We held basically 16, 17, 18 twice. So I just put a bid in case come off quickly. So I've already put not up huge on the day, about 700 because it did well with S&P, but I did give it again a little bit back on the NASDAQ, having to flip and go short. Now my risk on the upside would be this kind of 50% area, and it's the same on the NASDAQ. If we started to get above 1440-ish, then I would have to start thinking about playing defense from a bear's perspective since I'm playing the short. Okay. So and the whole time you're doing this, we're keeping an eye on the 15-minute cycle, 30-minute cycle. So here I'm bidding at 20 and a quarter. Now we just held right there. Sometimes I will move up if I just miss. I think wasn't I bidding 18? I already moved up to 20 and a half. So here are again I think I might even short S&P here. Oh, I did. Okay, because we were at pi. I was like, you know what? Let's just take a little bit more risk. So now I'm short across the board, covering nice covers. Okay, now here I'm bidding 03 and 3/4 right here. Quick scalp, boom, a little bit more on S&P. And now look, we broke 11, 12. That area is breaking. See, and then it just, you can see this is what it looks like when you break. The selling just comes in and it just, they smash it. And now look, as we bounce back up, so I sold more at the new low. I may sell again here in S&P. That would have been an aggressive sale right there, and then you would have bid to cover. This is that lower high I was showing. I guess I can go back to it. This was the lower high I was showing right in here. 2021. See, we made a new low. Yeah, made a new low and they make the lower high there, 2021. And I believe we break to new lows, so I'm going to cover. I want to cover new lows. So if this breaks, you'll see me cover and then start to add and reduce again. Now that would have been, since I was short NASDAQ, it would have been okay to maybe buy long S&P as a hedge against it. And if we break, you'd most likely be making more money on your NASDAQ here, being short too. Okay, I think I try another short. Yeah, I do. A short S&P again there because it's that 50% of the wall. And I've already got some money in the on the book, so I'm okay with being a little bit more aggressively short. And then now that I got S&P short on, I'll be quicker to cover NASDAQ. Like I probably put a bid in here, right in here. That's my guess. Watch, let's see if that happens. I'll probably cover right in here if we get that break. Okay, so I cover S&P. That was a good sale. Another quick scalp. And here, see, here's my bidding at 10. Like 6 points. There you go. Boom. So about 1200 at this point. It's a Chicago time. So we're only about 10 minutes into the, not even 10 minutes in, 7 minutes in. Going back to the tick chart. And it's just more of the same. It's more of the same. At this point, if you check the 15-minute cycle, we had pi, so we hadn't broke 1400 yet. Pi was down here around 973, and the 30-minute again is all the way back here towards 3900. So there was still room on the downside, right? 15-minute cycle was still coming down at this point in time too. So next we're watching is the 1400 level. Okay, we just started to break that. I'm short again. See S&P's breaking down now. That 4205 was big, remember? That was this zone right here. So notice there's nothing till pi is all the way back at 4192. So you've got 4200, the whole number, which kind of coincides with that 14,000 level of NASDAQ, not quite. But if you break that, you get the full pi cycle, right? That's part of it. You break the bands, the TMS is right there. There's room to go all the way back to 4192. So I'm not really interested on buying lower lows as a hedge at this point. I'm already up 2,200 on the day. I don't need a hedge. So notice how, look, I'm busier on the short side. I've sold 13 times. I've only bought, or, played the long side or the short side a few times even. But you can see the ratio. So notice I'm not buying these lower lows. Now I'm just working the short side. This is where the gains start to come in. I'm just working this. Short 3, see I'm getting heavier. Again, this isn't fighting it, adding to your loser. This is getting some money on the books and then working a profit cushion. This is my break even. I've got 15 points there. So, and here I'm playing the tick chart. Short cover. Short covering. Nothing over here. Just leaving that alone. Short, tick charts high, and then I'll cover into these lows or lower lows. Almost 4 grand on the morning. Gonna cover here. I imagine right now that would have been a good spot to cover right there. So you would have covered right there. Probably would have reshorting. Right. All right. Can only record for 10 minutes. And then, 1 second here, guys. Bring second recording. All right. Yeah, so we're up about 3,800. Short 3. Not a bad spot to cover here at new lows. Boom, I did it. 55. Always the same process. Want to cover lower lows, adding and reducing. What I used to do was I would just be short. I would be let me fix that. What I used to do is I would press into the lows. So instead of selling here and covering here, I would be short and then I would break to a new lows and then I would add. And that's the reverse of what you do. That's called pressing. Even though I was short and I was making money, and you can still do well if you continue to drop, but the better thing to do is to be short there, covering the new low. And I'm getting heavier, but I'm still adding and reducing. So trying to cover 55. See if they get us. Boom. All right. Still short a couple. Nothing on. Not interested in S&P long. All right. Basically coming up on 10 o'clock Eastern, 9 o'clock Central. Again, notice I've been involved 17 times here on the short side. 3 times the amount, almost 4 times the amount. Okay, there's a bounce. Cover, be short, short more. Bidding below the market. Now we came to here and then we went back to pi. So I might, okay, I left my bid there. That was kind of, I probably would have stepped up normally to that level. And it's just more of the same, guys, until the market kind of starts to finally make a lower low. So this is test 9. So we're kind of flirting with these highs here on the NASDAQ, and then we made a final push down here into the 20s right in here. So what's happening right now is the market's kind of trading around in here. And then we made this final push into the 20s, and I just called it a morning. And then I tried a contrarian long on the core positions down here, which we got a little bit of a bounce I scalped out of. But that's longer, that's swing time frame, longer term time frames. I bought some calls down here on the lows that I just came out of. Actually bought some 1380 calls, 880 calls on the low that I came out of. But that's trading against my core position. That's the rest of the morning. That's not in this video. So just to wrap up on towards the end here, guys. So there's a look at the 1 minute chart. See, that's what I mean. Add and reducing, boom. Literally only risking maybe one contract that can go against me in the beginning while keeping the risk tight. And then when it starts to work for you, get inside the trend, you can get more aggressive. That's a lot. You guys are good about, a lot of you are getting good about the trend and the analysis and getting your cycles and your rhythm down. But then the next part is you got to really focus on how you work your position. If you're adding to your losers, you're gonna have blow-ups. It's gonna be tough. If you're going to contrarian, no, you want to get inside the trend and then add and reduce with the cycles, but in the direction of your play. In the direction of your profitability. So let me just speed this up for the sake of the length of the video. Come in here, look, you made another new low to 1930. I didn't cover there, probably reshorting right in here. It looks like I'm covering 35s. S&P was down at 41.95. Trading up at 30.50. This is right before the final drop. Covered there. Okay. And then this is the final drop here into the 20s. Not the final drop, but basically inside of this 30, 45 minutes, first 45 minutes of trading. So I'm short 3 and actually went long one S&P. Okay, so right here you can see where I started, the cycle's starting to get low in the 15 minutes. So I started to try a couple little longs. I went long down here and I came out. I went long there, which I'm still long from because I'm working the short side more. So I'm dragging along now. You can see I'm down $200, $150 on this long, but I was just short 3. It just covered, and you'll watch how I end up closing this out and then closing this out a little bit lower. Okay, new low S&P. Oh, okay, the video cut off right there. But anyway, then I end up getting flat into that new low. See, we're coming into the 20s. I think this shows where I was flat. Yeah. All right. So there, see that long? That's where I exited that. I gave a little bit back, but who cares? I made probably another grand, close to a grand on this final drop into the 20s. Cycles low. And then just called it a morning flat. Boom. 5,400, 5,500 inside of first 30, 45 minutes. So this was a good move. You're going to have, when you get it short on the days you break down, you'll have bigger days because the market drops harder and faster on the short side. But anyway, I hope that guys helps. This is exactly what I was talking about in the longer video the other day. Just to recap, that's what I mean. How you flip and reverse, how you work your position, following the cycles, following the trend, and then this is the market maker style of play where you can get bigger, you work the near terms, you work a position. And I was really only trading about 3 contracts on the short side. We can trade up to 15 contracts, and there's times where I'm getting short 5 contracts, or I'm hedging with 7, and I really add into it, and you can even have even bigger days. But you don't just start right off the bat 5 contracts out the door. You're going to be, next thing you know, you're going to blow out 3 grand, hit your max loss per day. It's just like I did. It's slowly working to a grand. Okay, I'm up 2 grand. Now I'm in the direction of the play. I'm getting some chances to add and reduce. The market starts to break down from some levels. You get a little bit more aggressive, you parlay it, and then that's how you start with a little bit of risk. And you know, most traders, they try to do, okay, well, I'm going to set a target and I'm going to my 2-to-1, 3-to-1 risk reward. Well, this is 5-to-1 risk reward. If we're risking $500, this is 10-to-1 risk reward, right? Risk 500 to make 5,000. And that's because I'm playing. Not only am I not just short, set a target and hoping that the market gets there, I'm working 5 times, 4 times the amount. I'm not only my risk reward, I'm heavier on I'm adding 4 times the amount in the direction of my play. It's giving me 10 times the results. So here you have an example. If you want to say you're risking $500, 10-to-1 risk reward play by learning how to get your size bigger, adding. All big traders are adders. It's not just short, set a target. That's only going to get you 2-to-1, 3-to-1. And a lot of times you're going to be missing. There's way more to do in here. This is what the algorithms do. This is what high frequency guys do. This is what the market makers are doing. This is what the good day traders, this is what it looks like. 10-to-1 risk reward, 5-to-1 risk reward. Okay. Hope that helps, guys. Hey, this is how you join up. If you like this, if it resonates with you, if you want to take your trading to the next level, you want to be a part of our team. I've been doing this 15 years. 11 years we're trading fixed income. 3 years prior at Charles Schwab, ran rates desk, sell side fixed income, covered all the primary dealers, a lot of hedge funds. Still work with guys like that. And yeah, so we have our services. You go to jenkinscm.com, jenkinscm.com. I've got some real-time alerts and some analysis we do, but that's just on a weekly basis. The intraday, day trading type stuff like this, the coaching, the mentorship, you get our full directional model. This is what we're offering right now. You get all my courses. This is our Forex course, Pi Cycle. This is the proprietary directional model that we built over 9 years. This is a 9-hour video. 11 years trading professionally on the institutional desk. And then option course, I threw that in there, how we trade options around the swing trades and core positions. But it's about $8,000 in value. Normally the coaching program is $5,000 because I'm working with institutional guys at $10,000, sometimes $25,000 a quarter. This is for the entire year. But if you want to get going in May, 50% discount, $2,500. You guys would be on your way to trading high level like this. It's a skill set that you can always have the rest of your life. And the freedom that comes with trading is like none other. So 30, 40 minutes, you can make type of money that some people make in an entire month, right? Okay, hope that helps. You guys enjoy the rest of your trading week and talk to you soon.